Well, the S&P 500, as we mentioned, failed to hold above the 3,000 level today. The chartmaster says something exceedingly rare just happened. That really sounds like Carter, doesn't it? Let's get to Cornerstone Macro's Carter Worth with more. Carter.
How exciting. Well, actually, that was the title of Monday's report today, and it's about healthcare and the performance of mid-cap versus the index. But let's look at a chart of the S&P. In a way, this was a day for everyone. Bears can call out the big fade, basically closing on the low. Bulls can call out the fact that, of course, we're up again. But what we do know is that the market stopped dead cold to the penny, in fact, at its 150-day moving average, and basically never could push higher from there. We also know that it's the same situation where, yes, the market's down now only, 7.5% for the year, but the median stock is down almost 14. It's still a party of just a few. And that remains the problem. In any event, what is exceedingly rare is the performance of mid-cap healthcare stocks relative to the S&P mid-cap index. So take a look at the first slide here, the second slide, and it's going to show you just the spread, the year-to-date spread. At no time in the history of the data has the spread been this wide, where you've got the sector, healthcare, being up 9% plus or minus, and the actual index being down 14, 15. So 2,400 basis points of spread. Now, take a look at the two charts that depict this. This is a chart. The first one is comparing those two lines. It's the sector itself versus the index, and you see the spread year to date. And the next chart, of course, is on a 2-year basis. And so one could say, so what? But here's the thing. When this has happened in relation to the large cap healthcare, it's happened 3 other times year to date, meaning at late May period, where mid cap healthcare has outperformed large cap healthcare by as much as 1,000 basis points. What happens is, going forward, it's actually exceedingly bullish for mid cap healthcare, remains bullish for large cap. There's a little bit of a catch up, even though they don't still outperform mid. And yet the market is tepid. So an interesting setup, something that's never happened before in terms of spread, and something to be watched.
The market is tepid. Does that mean that we should extrapolate that you don't believe in this rotation that we've seen, the rally in banks today and industrials?
Sure. Let's take a second on that. The hope is, right, that the cyclicals come to life, and that means the economy is getting better and people are bracing risk. But what we know is we've already expended a lot of energy at the weak end of the market. Regional banks are up 50% off their lows in some instances, so are certain cyclicals. And yet we've had a big move out of all of the stretch tech names. They're right back at former highs, Apple, Microsoft, Adobe. And so at this point, we actually have had quite a big move from some of the beaten up names. And were the rotation really to take force, there's too much money at the big end of the market, meaning we know the top 5 are 23%. If you have money actually coming out of the high flyers, there's not enough sponges at the bottom of the market to absorb the money.
Very vivid. Carter, thank you. Carter Braxton Worth joining us.
You bet.
By the way, we've lost Guy Dunn. We're having a little, spotty technology issues today, so Guy's grayed out. In the meantime, Dan, I'll go to you. What do you think of Carter's charts, his call on healthcare specifically?
Yeah, healthcare is really interesting. I mean, I think that spread is interesting, and we all know that there's tremendous focus from so many different parts of the investment universe on this sector. We're really pinning a lot of the economic hopes in the next 12 months on what these companies are able to do on therapies and on vaccines. So everybody is optimistic about it. I think that's pretty well reflected in the stocks. I look at the IBB, that's the ETF that tracks the biotech sector, and I say, well, it probably got a little ahead of itself. It broke out to a new all-time high. There's a massive double top if you go back to 2015, and then there's probably a level where you can reload and buy that at 120 if you're playing for a lot of these catalysts that you see playing out over the next year and a half or so. But here's the thing. I mean, I think Carter kind of said this. I think there's a lot of different sectors. I think the broad market, they're probably pricing in a lot of the best case news in the next 6 to 12 months. So to me, I just don't see any panic to buy here, especially when you see a rejection at a key technical level. I don't want to put too much emphasis on that. But listen, at the end of the day, I think the things that are going to take us higher, to his point, are going to be the mega caps, and they're obviously pausing right here.